Now, after a quick look inside of my 7-figure dividend paying portfolio, you can see that I absolutely love covered call style, option style, income focused ETFs. I'm talking about things like the Global X NASDAQ 100 covered call ETF, QYLD, which I own 2,700 plus shares of, or my 1,200 plus shares of JEPI, or even my 500 plus shares of JEPQ. Now, I love covered call style ETFs because, for one, they offer a lot more income potential than many other ETFs across the market, but also I'm a huge fan of the covered call strategy, and I actually personally implemented across many positions in my portfolio that you see right here. But in this video, we're going to go through a brand new covered call style ETF that I just came across and just started looking into. And I promise you, this is one of the highest quality, best performing covered call style ETFs I have seen in a while, so you're definitely going to want to stick around. But before we get into it, make sure to drop a like down below, subscribe to my channel, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, the new, to me at least, covered call style ETF that I just came across as of recently is the Goldman Sachs NASDAQ 100 Core Premium Income ETF, or ticker symbol GPIQ. Now, let me just give you guys a quick preface. If you're a fan of JEPQ, the JP Morgan NASDAQ 100 covered call style ETF that offers a ton of income potential and that also has grown very, very fast on multiple occasions, you are probably going to like this Goldman Sachs one just as much, if not more. Now, as far as GPIQ, it says right here in overview, objective seeks current income while maintaining prospects for capital appreciation. So that's basically my objective across my entire long-term portfolio. A lot of people ask me why invest in some higher yield, why invest in some lower yield, and the reason being is very simple. I want to raise my current income substantially in my portfolio, but I also want some upside and some capital appreciation along with it. It then says reason to consider investing into this ETF. Seeks consistent monthly distributions, aims to generate a consistent monthly distribution rate generally from option premium and equity dividends. Now, I like the fact that it's seeking to generate a consistent monthly distribution because honestly, with JEPQ, the NASDAQ 100 covered call style ETF, although I own a ton of it, I own over 500 shares as of right now, it does pay a different amount every single month, depending on what happens in the market, depending on things like volatility, etc., which is not really a big deal, although I personally like ETFs that try to seek to pay you a consistent amount every single month. Now, also, it says core equity exposure with lower volatility, provides core equity exposure to the NASDAQ 100 index, and dynamically sells call options, allowing for participation with rising markets and potential outperformance in negative or flat markets. It then lastly says diversifying source of income, seeks to deliver attractive income with lower correlation to traditional income sources with their risks. Now, digging a little bit deeper into GPIQ, it says it invests in the stocks of the NASDAQ 100 and generates a steady stream of monthly income for its holders through dividends from its holdings and income received from selling covered calls against these holdings. Now, it then says, this is very, very important. Goldman states that GPIQ will typically sell calls in an amount ranging between 25 and 75% of the value of the fund's equity portfolio. The fund also has the ability to invest in and sells calls on other ETFs and over-the-counter insurance. Now, because this ETF of course sells calls, this means that there's going to be the potential to generate a ton of income consistently in sideways markets or even if the market drops down a little bit. But because GPIQ only sells between 25 and 75% of the value of the fund's equity portfolio, this means that this ETF is also going to give an investor like myself being a potential for upside and capital appreciation if of course the underlying NASDAQ 100 trades either sideways or upwards within the time frame, which at least historically speaking, the NASDAQ 100 has done pretty well, so at least going off of history might have the ability to keep doing so. Now, I like this a lot because as a relatively younger investor, like I sort of mentioned earlier, that's seeking income but also wants capital appreciation, I definitely would not categorize myself as a income investor. I want to earn a lot of income through my portfolio, and as you guys have seen my portfolio, I definitely do so, but I also want the potential for capital appreciation because at 32 years old, I still want my net worth to go up along with my income. Now, with this ETF's very unique strategy, I think it offers the potential perfect balance between income generation and with capital appreciation because of course it sells calls on 25 to 75%. And I think for those reasons, because the NASDAQ 100 has done so well and will probably keep doing well in the future, at least in my humble opinion, I think that this ETF could even outperform JEPQ in the upcoming years while still providing investors a ton of income along the way. But I know you guys are probably asking about what about the distributions, how big are they, and what do they look like? Now, at least since 12/04 of 2023, so keep in mind this ETF is relatively new. The distributions have been anywhere from 37 cents, 38 cents, upwards to 41, almost 42 cents, but roughly speaking around 40 cents more or less every single month for every single share that you own. Now, I mentioned earlier that I like the fact that this ETF at least tries its best to pay you a relatively same amount every single month, because for me personally, I like to forecast out how much income as far as dividends, distributions, or return on capital, whatever the case might be. I like to forecast it out in the future to see where the portfolio is at and to see what I could potentially be earning ongoingly. But here's the real magic when it comes to GPIQ, the Goldman Sachs Nasdaq 100 Core Premium Income ETF. This ETF, although it's only been trading for just under a year, it's up around 22% plus, and this is not even including distributions or dividends, which means this ETF strategy seems to be working flawlessly, at least with the way the Nasdaq 100 has been trading in this time frame. Now, what's really crazy is that if we look at 0.9 years, which is more or less how long GPIQ has been trading since inception, if you were to have invested $10,000 into this ETF and reinvest those dividends along the way, you would have started out with $10,000 and you would have had just over $13,300, or a total return of over 33% and an annualized gain of somewhere around 37%. Now, even if you didn't reinvest those dividends, we're still talking around 32% total return, which is madness. Especially if we stack up this ETF next to JEPQ, which also I kind of consider the gold standard for covered call option focused income style ETFs. I mean, JEPQ is more or less really as good as it gets. But if we were to stack up GPIQ next to JEPQ and go off of the same exact metrics, GPIQ would have had a total return, of course, with dividends reinvested, this is 33.33%, where JEPQ would have had 30.22%. Now again, they haven't been trading for the same amount of time, and they do offer a little bit different strategies, but the question still does remain, is GPIQ going to crush JEPQ in the up and coming years because, of course, of that option overlay? Now, I say all this to say that the Goldman Sachs Nasdaq 100 Core Premium Income ETF is definitely going to find its place in my long-term portfolio, and this is mostly because of the covered call strategy that I like and the fact that this ETF does have the potential for a little bit more capital appreciation than other covered call option focused ETFs in its same class. But along with that, I like the fact that this ETF at least is aiming to pay investors a steady amount of income every single month. Not to mention the pay date for this ETF. I mean, this is getting a little bit specific, maybe a little bit OCD, but because it pays out on the 8th, 9th, and 10th around that area on a monthly basis, I don't personally have that many holdings that pay out around that time frame, so if it continues to do that, that's just another bonus for me. So now that we talked about GPIQ, the Goldman Sachs Nasdaq 100 Core Premium Income ETF, we talked about how this ETF works, what it offers, and its performance up until this point. I'd lastly want to hear from you guys down below. Is GPIQ either in your portfolio as of right now, yes or no, and or will it be in the future? Let me know down below in the comments. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.